When I look at a silicon wafer, I don't just see a computer chip. I see a perfect system where every nanometer matters. The flow of electrons is governed by absolute, unbreakable laws of physics. If you violate the physics, the chip burns. It fails. The entire system crashes. I have spent my entire life engineering systems that accelerate the world. I look at data centers, at artificial intelligence, at the future of computing through first principles. You have to strip away the noise and look at the raw mathematics of how things actually work. But when I look at how most people manage their financial lives, I see a system that is designed to fail. You have been running your life on legacy code. The operating system you were given in school, the rules about saving and working hard and safety, was written for a hardware cycle that ended 30 years ago. You are trying to run modern software on a machine that is obsolete. Because of that, you are experiencing latency. You feel it, don't you? You feel that no matter how hard you work, the gap between where you are and where you want to be is widening. It is not closing. You take one step forward, but the finish line moves two steps back. It is not because you are not smart. It is not because you are not working hard enough. It is because the fundamental architecture of the world has shifted, and nobody sent you the update. In the technology world, if you miss a cycle, you die. If you missed the shift from mobile to cloud, or from cloud to AI, you didn't just fall behind slightly. You went to zero. The speed of change is exponential. Most of you have been taught to think linearly. You think if you take one step today and one step tomorrow, you will get two steps forward. That is linear thinking. But the financial system and the technological landscape are exponential. While you take one step, the ground beneath you moves 10 steps backward due to currency debasement. The math simply does not work for you anymore. I want to be very clear with you. I am not here to tell you which stock to buy. I am not a financial advisor. I am an engineer. I look for points of failure. And right now, the average person's financial strategy has a single point of failure. It relies on a set of truths that are actually lies. We are going to debug this system today. I am going to walk you through the mechanics of wealth that usually take a lifetime of painful mistakes to understand. I have seen these patterns play out in the 90s, in 2000, in 2008, and I see the exact same signals flashing red right now. This requires you to be very quiet and very honest with yourself. If you are watching this, it means you suspect that something is wrong. You are right. I need you to listen until the very end. The third truth we discuss is the one that separates the people who build the future from the people who are crushed by it. This is not about panic. This is about clarity. If you want to understand the system rather than just be a victim of it, you need to pay attention. The first truth you must accept is that the system is not broken. It is working exactly as it was designed to work. The problem is that it was not designed for your benefit. It was designed to keep the machine running, and the fuel for that machine is your time and your purchasing power. When we design a graphics processing unit, we think about throughput. We think about how much data can move through the system in a given second. If there is a bottleneck, the performance drops. In the global economic system, the bottleneck is debt. Imagine you have a swimming pool. The water represents all the value in the economy. It is all the goods, all the services, all the labor. Now imagine someone comes along with a giant hose and dumps 1,000,000 gallons of new water into that pool. The level of the water rises. If you are standing on the bottom of the pool, you drown. That is the saver. That is the employee on a fixed salary. The water rises above your head, and you struggle to breathe. If you are floating on a boat, you rise with the water. That is the asset owner. That is the person who owns stocks, real estate, or technology. The water is the currency. The boat is the asset. School taught you to stand on the bottom of the pool. School taught you that cash is safe. They told you to save your money in a bank account, earn a little bit of interest, and you would be fine. That advice is not just wrong, it is dangerous. In a world where the water level is constantly being raised by central banks, standing still is the same as sinking. You have to understand the history of this to see where we are going. Go back to 1971. Before that, money was tied to something physical. It had an anchor. There was discipline in the system. But when that anchor was removed, Money became nothing more than a signal. It became a belief system. And because governments could print as much as they wanted, they did. I watched this happen. I lived through the inflation of the 70s. I saw prices spiral. I saw people who thought they were secure suddenly struggle to buy groceries. The money in their pocket was the same paper, but the energy inside it had leaked out. Then came the technology boom of the 90s. I was there, building NVIDIA. We saw massive productivity gains. Technology is deflationary. It pushes prices down. It makes things faster, cheaper, and better. A computer that cost $5,000 in 1995 is a paperweight today. That is good deflation. That is progress. But the financial system fights this. The financial system is terrified of deflation. If prices fall, debt becomes harder to pay back. And remember, the system is built on debt. So the central banks have to print even more money to counteract the natural deflationary force of technology. They are fighting gravity. This creates a massive distortion. We have technology trying to make your life cheaper, and we have the monetary system trying to make your life more expensive. You are caught in the middle of this war. The result is asset inflation. The things you need to buy to become wealthy, houses, stocks, education, go up in price much faster than your wages. The things that distract you, TVs, phones, toys, get cheaper. This is why you feel like you are running on a treadmill. You can buy a bigger TV today than you could 10 years ago, but you are further away from owning a home. You have more digital entertainment, but less financial security. The system keeps you happy with cheap toys while it strips away your ability to build real wealth. Let's talk about 2008. That was a structural failure. The debt load became too heavy, and the system cracked. In a normal environment, the bad investments would have been wiped out. The forest fire would have burned the dead wood, and new growth would have started. But that is not what happened. Instead of letting the fire burn, they flooded the forest with water. They printed trillions of dollars. They pushed interest rates to zero. They saved the banks, but they destroyed the signaling mechanism of the market. When money is free, risk doesn't exist anymore. Or at least, it doesn't seem to. Companies started borrowing money not to build better products, but to buy back their own stock. People started buying houses they couldn't afford again. The can was kicked down the road. We are now living at the end of that road. You need to look at the scale of what is happening today. The numbers we are dealing with are astronomical. We used to talk about billions. Now we talk about trillions. The human brain cannot comprehend a trillion. It is an abstraction. But the math is simple. If the supply of money doubles and the amount of stuff to buy stays the same, the price must double. It is a law of nature. It is not unlucky. It is not a coincidence. It is an equation. Most people treat the economy like the weather. They think it just happens to them. They think a recession is like a storm. It comes, it goes, and you just have to hunker down. I look at the economy like a circuit board. If a capacitor blows, it's because the voltage was too high. If the system overheats, it's because there is too much resistance. Right now, the voltage is too high. The debt levels in the Western world are at points where they can arguably never be paid back in real terms. There are only two ways out of this trap. One is default, telling the world we won't pay. That leads to catastrophic collapse. No government will choose that. The second way is debasement. You pay back the debt, but you pay it back with money that is worth less. You print the difference. This is the silent theft. It is the tax that nobody voted for. Every time they print money to fund a war, or a stimulus package, or a bailout, they are reaching into your savings account and taking a sliver of your value. You don't see the money leave your account. The number on the screen stays the same. That is why it is so insidious. If the government came to your house and took 10% of your furniture, you would riot. But when they devalue your currency by 10%, you just complain that groceries are expensive. This is the system school never told you about. School taught you to be a good employee, to trade your time for money. But think about that transaction. You are trading your most limited resource, which is time, for a currency that can be printed infinitely by a bureaucrat in a meeting room. That is a terrible trade. It is like trading gold for sand. One is scarce, the other is infinite. The wealthy understand this. They do not work for money. They work for assets. They want to own the things that float when the tide rises. They want equity in companies. They want real estate. They want intellectual property. They want scarce commodities. When I started my company, I didn't take a massive salary. I took ownership. I wanted a piece of the machine I was building. I knew that if we succeeded, the value of that ownership would detach from the hours I worked. This is the concept of non-linear rewards. When you work for a wage, your reward is linear. You work 1 hour, you get paid 1 hour. If you stop working, you stop getting paid. When you own assets, your reward is exponential. The asset works while you sleep. The asset grows as the money supply expands. The asset benefits from the system that is destroying the saver. You have to shift your mindset from being a laborer to being a capital allocator. Even if you don't have much capital yet, the mindset must shift first. You have to stop looking at the price of a stock or a coin or a house and saying it is too expensive. You have to ask if it is expensive or if your money is just worth less. Usually, it is the latter. Look at the stock market. People say it is at all-time highs. They cheer. They think the economy is booming. But if you price the market in gold, it has been flat for decades. If you price it in terms of the money supply, it is not growing nearly as fast as you think. The stock market is not going up because companies are selling more widgets. It is going up because the dollar is going down. This is a hard pill to swallow. It means that the safety you thought you had is an illusion. It means that the pension you are counting on might not buy you the lifestyle you expect. It means that the bank account you are so proud of is actually a leaking bucket. But you have to see this. You have to stare directly at the sun. If you don't understand the game, you are the resource being harvested. The system relies on your ignorance. It relies on you staying on the hamster wheel, chasing a wage that never catches up to the cost of living. I want you to take a moment and think about this. Think about your parents. Think about an older mentor. Think about someone who is retiring right now. Ask them if the world feels harder today than it did 30 years ago. Ask them if the advice they gave you, to save, to be safe, actually worked for them in the end. Or did they just survive? Survival is not enough. You need to thrive. The second truth is realizing that the money itself is broken. The third truth, and this is the one that separates the wealthy from the working class, is understanding the physics of how wealth moves to escape that broken money. In physics, energy seeks the path of least resistance. In finance, capital seeks the path of highest efficiency and strongest protection. Wealth flows from those who consume to those who produce. It flows from those who hold currency to those who hold assets. And most importantly, it flows from the impatient to the patient. The schools taught you a very simple equation for wealth. They said income minus expenses equals savings. They told you that if you maximize income and minimize expenses, your savings will grow and you will be rich. That equation is mathematically flawed because it ignores the variable of time and the variable of dilution. While you are saving that cash, the government is printing more of it. They are diluting your effort. It is like trying to fill a bucket that has a hole in the bottom, and the hole gets bigger every single year. Wealth does not move through savings. Wealth moves through ownership. This is the concept of equity. When I wake up in the morning, I don't think about my salary. My salary is irrelevant. I think about the value of the enterprise I am building. I own a piece of the machine. If the machine becomes twice as efficient, my wealth doubles. If I was just an employee paid by the hour and the machine became twice as efficient, I might get a 3% raise. Or I might get fired because the machine doesn't need me anymore. This is the great divergence. If you look at a chart of the economy since 1971, you will see two lines. One line is productivity, which is how much value we create per hour of work. That line has gone straight up. Technology, computers, the internet, we are incredibly productive. The other line is wages. That line is flat. It has barely moved in real terms for 50 years. The difference between the productivity line and the wage line is the profit that went to the owners of capital. It went to the shareholders. It went to the people who owned the robots, the software, and the land. It did not go to the people who did the work. This is not a political statement. I am not saying this is fair or unfair. I am an engineer. I am telling you how the system is wired. If you are angry at the wiring, you can burn out. Or you can rewire your position in the circuit. You have to move from the labor side of the equation to the capital side. You have to stop buying liabilities and start buying assets. Most people think they know what an asset is, but they don't. A car is not an asset. A television is not an asset. Even your house, if it takes money out of your pocket every month, is technically a liability until you sell it. An asset is something that has a claim on the future energy of the economy. Wealth primarily moves into three specific vehicles to escape inflation. The first vehicle is scarcity. In a world of infinite money printing, the only defense is finite scarcity. This is why real estate in prime locations goes up forever. They are not making any more land in Manhattan or London. The supply is capped. The demand is infinite because money is infinite. Therefore, price must rise. This is why gold has held value for 5,000 years. It is hard to mine. You cannot print it. And this is why, whether you like it or not, Bitcoin has emerged as a trillion-dollar asset class. It is the first time in human history we have discovered absolute digital scarcity. You can copy a file 1,000,000 times. You cannot copy a Bitcoin. It is mathematically capped. The second vehicle is innovation and technology. This is my world. Technology is the only force that fights inflation. Technology makes things cheaper. But the companies that build the technology capture immense value. We are entering the age of artificial intelligence. This is the industrial revolution for the mind. In the agricultural revolution, machines replaced muscle. An ox could do the work of 10 men. A tractor could do the work of 100 oxen. In the AI revolution, machines are replacing neural firing. A GPU can do the reasoning of 1,000 junior analysts. What does this mean for wealth? It means capital concentration is going to accelerate. If I can run $1 billion company with 10 people and 10,000 GPUs, the profit per employee goes to the stratosphere. If you own the GPUs, or the software, or the company, you become incredibly wealthy. If you are the person whose job was replaced by the GPU, you are in trouble. Wealth moves to the architects of the future. It moves to the problem solvers. You don't have to be a computer scientist to participate in this. You just have to own the companies that are doing it. You have to be a shareholder. The third vehicle is debt. This is the most dangerous tool, but the most powerful one. Schools teach you that debt is bad. They say, stay out of debt. But the wealthy use debt as a tool. If money is losing value at 7% a year, and I can borrow money at 5% to buy an asset that grows at 10%, I am effectively being paid to borrow money. This is how real estate fortunes are made. You use the bank's money to buy the asset. The tenant pays the debt. You keep the appreciation. Inflation destroys the lender and benefits the borrower, because you pay back the loan with cheaper dollars in the future. Now let's look at the math of playing it safe. This is the part that breaks people's hearts when they finally understand it. Let's say you have $10,000. In one scenario, you put it in a savings account yielding 4%. In the other scenario, you invest it in a diversified portfolio of assets averaging 8%. The difference doesn't sound like much. It sounds like a small spread. But over 30 years, the savings account turns into $32,000. The investment portfolio turns into $100,000. Wait, it gets worse. Because of inflation, that $32,000 in the savings account will likely have the purchasing power of only $10,000 today. You made zero progress. You ran in place for 30 years. I see young people today who are despondent. They feel like they missed the boat. They see people getting rich on crypto or AI stocks and they feel envy. Envy is the lowest frequency emotion. It blinds you. Instead of envy, you need curiosity. You need to ask what they saw that you missed. They saw that the old system was leaking, and they moved their buckets to where the water was flowing. We are currently seeing a rotation from the old economy to the new economy. The old economy is based on labor, physical retail, and linear growth. The new economy is based on code, digital networks, and exponential growth. Wealth is fleeing the old and rushing into the new. If you are holding a portfolio that looks like 1990, heavy on cash, bonds, and old industrial stocks, you are holding a melting iceberg. You need to understand the concept of asymmetric risk. This is how I run my company. We take bets where the downside is known, but the upside is unlimited. If I invest 1 billion in a new chip architecture, the most I can lose is 1 billion. But if it works, I can make 100 billion. The upside is 100 times the risk. Most people live their lives the opposite way. They take bets where the upside is small, like a 3% raise, and the downside is unlimited, like getting fired or obsolescence. You have to hunt for asymmetry. This means you have to be willing to look foolish. When we started talking about using graphics cards for artificial intelligence in 2012, people laughed. Wall Street didn't understand. We looked foolish for a few years. But we were right. And because we were right when everyone else was wrong, the payoff was astronomical. The first truth is that you are not safe in cash. I hear this constantly. People tell me they're just going to keep their money in the bank until things settle down. They say they don't want to lose money, so they will stay in cash. You need to understand that safety is an illusion. There is no such thing as a risk-free asset. There is only risk transfer. When you hold cash, you are trading volatility risk for debasement risk. Volatility is the price going up and down. Debasement is the value going down permanently. Imagine you are on a boat tied to a dock. The tide is rising. The dock is sinking. If you tie your boat tightly to the sinking dock because it feels stable, your boat will be pulled underwater. The dock is the fiat currency system. Your boat is your purchasing power. When you hold cash, you are tying yourself to the sinking dock. You feel stable because the number in your bank account doesn't change. $10,000 is still $10,000. But the water is rising over your head. You have to choose your poison. You can accept the volatility of assets like stocks or crypto, where you watch your net worth swing wildly and feel nausea. Or you can accept the stability of cash, where you feel calm and sleep well, but over time you drown. Most people choose to drown slowly rather than risk the nausea of the waves. That is a biological defect. We are wired to fear sudden loss more than slow erosion. Inflation is slow aging. It is killing your financial future, but it is doing it too slowly to trigger your fight or flight response. You have to manually override that instinct. The second hard truth is that diversification is for people who don't know what they are doing. This is controversial. Your financial advisor will tell you to diversify. They will tell you to buy a little bit of everything. That is excellent advice for preserving wealth. It is terrible advice for creating wealth. Look at the richest people in the world. How did we get here? Did we diversify? No. I put everything into NVIDIA. I put my time, my reputation, and my capital into one basket, and I watch that basket like a hawk. Concentration builds wealth. Diversification preserves it. The third hard truth is that you will probably sell at the bottom. Everyone says they will buy when the market crashes. I have seen this in every cycle. When the market is high, everyone is a genius. Everyone is greedy. They say if Bitcoin drops to 20,000, they will buy. Then the crash happens. And what do? Do they buy? No, they freeze. Because when the crash actually happens, it doesn't feel like an opportunity. It feels like the end of the world. You have to understand that your emotions are a lagging indicator. When you feel good about the market, it is usually time to be cautious. When you feel sick about the market, when you want to vomit, that is usually the time to buy. The greatest risk you face is not that Bitcoin drops 50% next week. It is not that the stock market has a correction. The greatest risk is that you wake up in 10 years and you are in the exact same financial position you are in today, but everything costs 3 times as much. That is the nightmare scenario. That is the risk you must avoid at all costs. You have to become comfortable with being uncomfortable. I want you to imagine a timeline. Imagine it is the year 2035. You are looking back at today. You are looking back at this moment in history. You will see clearly that this was the time when the debt spiraled out of control. You will see clearly that this was the dawn of the intelligence age. It will be obvious in retrospect. What will you tell your future self? Will you say that you saw it coming but were too scared to act? Or will you be able to say that you saw the pattern, that you recognized the shift, that you took the hard steps to educate yourself, that you ignored the herd, that you built an ark before the rain started? The system of fiat currency is pure entropy. It creates disorder in your life. It erodes your effort. It dissolves your time. To fight this, you must apply the energy of knowledge and the energy of discipline. You must build a wall of assets around your family that entropy cannot cross. This is not about getting rich quick. This is about get rich sure. It is about looking at the mechanics of the machine and placing your capital in the gears that drive the machine, not the parts that get crushed by it. It takes time, it takes patience, it takes a stomach of steel. There will be days when you feel foolish. There will be years when you feel like nothing is happening. That is the nature of compounding. It is slow, 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 and then suddenly it is fast. The bamboo tree grows underground for 5 years. You water it every day and you see nothing. If you stop watering it, it dies. But if you keep watering it, in the 5th year, it shoots up 80 feet in 6 weeks. Most people stop watering in the 4th year. They give up right before the exponential curve hits. Do not be that person. Do not quit on your future because the present is boring or scary. You now have the framework. You know the 3 truths. Truth 1, the realization that the old map is obsolete. Truth 2, the system is designed to debase your currency. Truth 3, wealth moves to scarcity, technology, and patient capital. You have the hard truths about your own psychology. You know that you are the enemy. You know that fear is the mind killer. The final step is action. But not frantic action, calculated action. Sit down, look at your balance sheet, look at where your energy is stored. Is it in the dying system or the living one? Make the adjustments. Do it quietly. Do it steadily. Ignore the noise. If you do this, you will not just survive the coming changes. You will look back at this time as the moment everything changed for you. You will look back and say, I saw the system. I understood the physics. And I made the right move. I hope this brings you clarity. I hope it removes the fear and replaces it with resolve. The world is not ending. It is just changing. And change is only terrifying to those who are unprepared. Good luck, and keep building.